Welcome back, guys, to another video. This is Karan Singh with Optimal Loans, and in today's video I will be sharing with you top trends that are happening in the mortgage industry, top trends that we have seen last year and trends that have continued to happen this year post-pandemic. Number one, we've noticed that interest rates have been dropping. In fact, last week the interest rates dropped. A 30-year was average sitting at around 2.708. A lot has to do with the central bank, our Federal Reserve Bank, which is buying these mortgage-backed securities. Right now they're buying around $40 billion of mortgage-backed securities monthly. And in fact, there was a meeting that happened about a week and a half ago where Chairman Powell indicated that he is going to continue to do this until job market is strong enough. But despite that, we have a lot of people that are tied to the real estate industry and the mortgage industry and other economies that are predicting that rates may start to rise towards the end of the year or early spring next year. They're predicting almost a 50 basis point jump. So you'll probably see a 30-year mortgage sitting at around 3.5%, as opposed to now, which is sitting at around close to 2.99% or a little bit below 3%. But really, nobody really knows what's going to happen, but this is what's happening in the market right now. So if you are a buyer right now, it is a great time to lock your 30-year mortgage. Number two, we have been noticing large loan amounts compared to the years prior. According to a report put out by the Mortgage Banker Association, large loan amounts, applications for large loan amounts from $766,000 or above, we saw a 55% year-over-year increase in February 2021 this year. And that trend is continuing to go forward this year, as we are seeing the demand is still sky high and inventory is not there to meet that demand. So we're seeing home prices are continuing to rise, and you're seeing those large loan amounts that you didn't see a couple years back. Number three, stricter guidelines. During the pandemic, we saw craziness happening in the sense of everything, but we definitely saw retail shops or retail businesses being hit the hardest. Hospitality industry was hit really hard, and some other industries like the transportation industry was hit very hard. So what lenders did was, because a lot of people were losing their jobs or going on these furloughs, they made their guidelines stricter, especially if you were a self-employed borrower. If you were a self-employed borrower, they asked you to either provide an audited profit and loss statement, which is a CPA looking at your paperwork and signing off on it, or they asked for X amount of number of bank statements from you and actually looked at your bank deposits to make sure that you are going to be able to sustain this mortgage and your business was not negatively impacted or impacted in a manner by the COVID pandemic that can hinder your ability to repay or pay back the loan that you're taking on. Now, some of those stricter guidelines have stayed. So if you're a self-employed borrower looking to refi or looking to get a mortgage, you will still run into that same sort of underwriting condition that I'm talking about right now. But the great news is, if you're working with a lender that has, a lot of lenders have adapted new ways of underwriting that are very efficient. We are noticing that these loans are still closing between 15 to 20 days. So just have your paperwork ready to go and talk to your loan officer and know what you're working against when it comes to these underwriting guidelines. Great news is, the guidelines are strict, so we can have confidence that paperwork is being looked at diligently and there's no foul play happening here. Number four, large lenders, large banks are taking a back seat. This one's an interesting one. According to Business Insider's Intelligence Lending Market Report, which was just put out, top 5 banks, that is Wells Fargo, Bank of America, JP Morgan Chase, US Bank, and Citibank, only did 21% of loan origination in the last year during pandemic, compared to their 50% market share that they had in 2011. Now that's a staggering number there, because that's just the way of doing business. You always go to your traditional big banks. That's how people before us, the generation before us, were doing business. Now things have changed. the overall model is still the same, but you have lots of more options available for you online. Your typical average borrower these days goes online first before they walk into a bank. So if you're a buyer right now, first of all, I want to say I feel your pain. I know how it is out there. It's dog on dog. It's very competitive, but stay at it. And if you're not qualified and you've gone to look at some houses with your agent, I would highly recommend talking to a loan officer or asking your agent to recommend you to a mortgage broker or a lender or loan officer with a lender that can help you get qualified, because right now is a great time to lock in a 30-year mortgage with interest rates below 3%. Now, each scenario is different, but on an average, the interest rates right now are sitting at around 3% or below for a 30-year mortgage. And for my borrowers out there that are looking to refinance their mortgage to get a lower mortgage payment or get some cash out for a project or for your kids' education or whatever the reason may be, it's a great time for you to call your local mortgage broker. And like I always say, mortgage brokers are going to be better because in most cases the service is going to be better, and also the rate's going to be much better. Wholesale channel is just the way to go. If you are a buyer or a borrower that's had a recent experience getting a mortgage, either that's positive or negative, please share it with me. You can comment below or send me an email directly, because I love to hear all of your stories and I love to hear what's going on in the market. That's it for today, folks. I hope this video was insightful to you. Until next time, this is Karan Singh with Optimal Loans.